Hi everybody, welcome to another update on the stock screener. Today we are going to talk about Bitcoin. There are some people who wanted to take a look at that. And first of all, there is a Bitcoin checklist on my blog. So you can go there and check all the numbers to see if we are actually at the bottom or at the top. Let's go over this. First one is the Bitcoin price model of Wooble. And as you can see here, we are clearly at the bottom. So this should bounce up to 100,000 in the coming years. Okay. Meyer multiple, just looking at the average of where Bitcoin typically sits, is currently below the average. So it should move higher. Then we have the NVT ratio, looking at the networks, a bit higher than usual, but also the buy zone has gone up. So not a lot of downside risk, probably going to hover around here and go higher. Bitcoin transactions, you want these to go up, which is a sign of adoption. Transactions are actually up. Historically, it's in a rising trend, so looking very good. There is adoption. Amount of Bitcoin users needs to go up. Yeah, this is down a bit. Yeah, looks like a topping pattern. Not a lot of new users coming online, but there could be inflows from the same people. So don't be discouraged by this. I think more money will come into this sector. ATMs need to grow, which is a sign of adoption. We are actually not seeing ATMs grow that much. Yeah, looks like the growth is topping out, but maybe ATMs are not the solution. We are going digital. But yeah, if you are buying a Bitcoin ATM stock, look at this. It's not doing that well. Cost of transactions need to be low to have a bottom. And you can see here the cost of transaction is bottoming out. It's not at the top, so this could move higher. Then we have the hash rate needs to go up, which is a sign of adoption. Hash rates are at all-time highs. So this is looking very good. A lot of adoption. And then we have the relative unrealized profit chart. Shows us if people are, where's my chart? In greed or in capitulation phase. Actually, we are in optimism phase. So we're not in greed yet. But yeah, there's a bit of euphoria in the Bitcoin space. So could see some downsides based on this chart. But I think it's going higher. Stock to flow, the most important chart of all, tells us where the halving cycles are. So the halving is going to come here, and that's when it's more difficult to mine Bitcoin, and then it will go up. So we are approaching this period. Could go down a bit, and then it will shoot higher to 100,000, I think. So that's a double in Bitcoin. Well, multiple buy Bitcoin when mines have low issuance. This is at the average. It's not in the red zone yet, so yeah, there could be upside. Seasonality. Yeah, this is just to look if you should be in Bitcoin or in altcoins. It's more of an altcoin season right now, but it could go into a Bitcoin season. GBTC premiums are low, which is a bottom. Well, it's at zero now. So yeah, the upside is already gone, but yeah, it's not like it's at a premium now. This is interesting to watch. GBTC has gone into positive now. US dollar, I think US dollar is going to go down, which is positive for Bitcoin. So it looks very good overall. There is another catalyst in Bitcoin as well. So let's look at that. The new catalyst is the Bitcoin ETFs. So those are approved, which means there could be inflows. And the estimated inflows are 14 billion this year, then 26 billion, and then 40 billion in the coming years. So there will be Bitcoin ETF inflows. And the price move is not what you would think. You just don't add this fund flow into your market cap. That's not how it works. Okay. There is a multiple effect, multiplier effect with these inflows. So Bitcoin price will move up much more than the fund inflows. And there is a formula for that based on this chart. So these are the gold ETF fund flows and how this changes in price. So if there is 5 billion in inflows in gold, then the price moves 3%. Okay. If there's 10 billion that goes into gold, then it moves 6.5%. So that's what this says. This is a correlation, looks linear, and we are just using that correlation to forecast Bitcoin. Now, Bitcoin is not gold. It's a much smaller market. So there's a multiplier effect on that, and that's about 8.8 multiplier effect based on a 24 difference in market cap. So the gold market cap is 12 trillion. Bitcoin market cap was 500 billion, right? So that's a 24 difference. And based on this 24 difference in market cap and 36% less supply, we have 8.8 multiplier effect. So this correlation here, multiply that with 8.8 for Bitcoin. And that's what we do here. We have a Bitcoin market cap of 525. If there's an inflow of 1 billion, then we get a price impact of 6.2%. Why 6.2? Because that's 8.8 times this price effect. Okay, so we do that per month. Each month there is some inflows, and then it goes up by 5% per month, and the market cap increases. But of course, the gold to BTC ratio will go down because the market cap of Bitcoin goes up. And where does this money come from? It comes from gold, from stocks, and from bonds. So those assets will flow into Bitcoin, and the market cap of Bitcoin will rise. So today we are in January. We have almost 50,000 Bitcoin price, market cap 1 trillion. So fund flows coming in at 14 billion per year. That's this number here. And we are going to keep on rising 3% per month. At the end of the year, we should be at 60,000. So that's 50% higher. in a year. So buying Bitcoin is pretty good I wouldn't say investment, but it's good for your money if you buy Bitcoin. And then we go for another year with 26 billion in inflows. So that's this year, 2 billion per month. Multiplier effects around 4% per month. Why? Because the gold to BTC ratio is going down. So there's less multiplier, but it's still high because there's more inflows next year as the funds come in. So then we go to 100,000 Bitcoin. That's a double in 2 years. And then we go to 150,000, which is a triple in 3 years. 1, 2, 3, yeah, 3 years, you have a triple. And this is a chart. You start here, 50,000 to 150,000 in 3 years. Okay, that's a good return. Now, people think, oh, we should buy the Bitcoin companies, Bitcoin miners. They have more leverage. Well, I don't think so. We can actually check this with some company, GLXY.TO, which is this here. Currently, market cap around 2.5 billion US dollars. They don't really have assets, liabilities, so it's around 2.5 billion, but they do have 2.5 billion in Bitcoins and other coins. This is based on their latest holdings, and this is correlated with the Bitcoin price. So this is the Bitcoin price. These are the net asset values of GLXY.TO. It's correlated. And now Bitcoin is around 50,000. So they should have around 2.5 billion in Bitcoins. So that's added in the enterprise value minus this number. They do own only 33% of those assets. So that gives us the enterprise value, which is around 0. Okay. Actually 1 million, but okay. That's basically 0 for this 3 billion company. Now, what happens when the Bitcoin price goes up to 150,000? If it goes to 150,000, we can calculate the net asset value, which is just this divided by this and then times this, right? Then it goes to 9 billion in net asset value based on the Bitcoin price here. So if we triple Bitcoin to 150,000, then you can see here that GLXY.TO will have 2.2 billion in assets in negative enterprise value. That means the upside is 2.2 billion. Not sure if you understand this. If they have 2.2 billion in extra assets, then you can add that to their balance sheet, and this gap here is the upside, 2.2 billion. But market cap is already at 2.5 billion US dollars, so the upside to GLXY.TO would only be a double. So a triple in Bitcoin is a double in GLXY.TO, which means there is no leverage on this company. And their mining business is loss-making. So latest numbers you can see here. Yeah, this is not. Yeah, you can see here income is negative. So their mining business is loss-making. And that's why we have this net income here, this loss-making business. Maybe if Bitcoin goes up, then this will turn positive, but I wouldn't count on it. Basically, the upside is based on the net asset value of their coins that they own. That's the upside here. But I think it's much easier to just buy Bitcoin itself, or you can also buy Ethereum. It follows the same path, probably more leverage on Ethereum, because here the ETF still needs to come. So that was the update on Bitcoin. Forget about those miners, forget about Galaxy Digital, unless you want to buy companies instead of the Bitcoin itself. But I think the best way to gain exposure is to just buy Bitcoin and Ethereum. A triple is more than enough, and you don't have any counterparty risk with that. How you buy the Bitcoin, I'm not going to tell you. You should know how to do that. And I'll see you in the next video. Bye.